Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you a $1,000 option strategy. I'm going to show you how to implement this strategy, but most importantly, I'm going to show you how you can do this option strategy as well. Now, this option strategy works particularly well if you're trading with a small account portfolio. This strategy actually limits the barrier to entry. So, if you're trying to make some extra money with options trading, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I'll show you how I use my portfolio in order to make consistent income. For today's video, we're going to go over one simple option strategy that anyone could do, even if you're a beginner to options trading, and it will help you magnify your returns in your options. So let's get right into it. So right here, I have the options open and I'm going to go through it in detail. Then I'm going to show you how to implement this option strategy. Then I'm going to show you how to make your maximum gain. So the account value is at $2,510 right now, or 25.10 per share. The amount I paid for this option strategy was $14.25, or $1,425. Each option contract is multiplied by 100 shares. That's why it becomes $1,425. Now, a key thing to note, the expiration date on this option strategy is January 16th, 2026, which gives me a lot of time in order for this trade to go in my favor. Now, the current price is at $95.75. Remember that the break even is at 94.25. Now, I definitely need to remember the break even price. We're definitely going to touch base on the break even price again in this video. For today's return, the option is actually down 7%, or $195. But the total return on this option strategy gave me a return of $1,085, which represents a 76% return on my investment gains. Now, the date that I got into this option strategy was May 6th. So, roughly 2 weeks ago. So, that means within 2 weeks, I was able to get $1,000. Now, I know you're curious to know what option strategy that is, but don't worry, we're going to go ahead and get into that right now. But before we do that, there's two things I always require from my subscribers and also my viewers. Quite simple requirements. The first one is going to be to always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. The second requirement is that always make sure you have an exit strategy before entering any option trade. And we're going to go over an exit strategy in this video today. So let's go ahead and get down and dirty with options. Now, let me go ahead and demonstrate this simple option strategy that anyone could do. Let's go ahead to view all options down to the bottom here. Now, the stock I use this option strategy on is going to be MU or Micron Technologies. Now, I'm going to give you a walkthrough of how to implement this simple option strategy. So now we're going to go ahead to buy, we're going to go ahead to call, and we're going to choose our expiration date. Now, your expiration date is going to be based on your own thesis, your own due diligence, and your outcome for your portfolio. So, as you saw for that particular option strategy, I had an expiration date of January 16, 2026. However, for this video, I'm going to go ahead and use September 19th, which gives us 121 days to expiration. Now, the further out strike date you go, the more expensive the option becomes. The closer in strike date you choose, the less expensive the stock is going to go. But remember, the strike date is based on your own personal preference. So, like I said, we're going to use September 19th. That gives us 121 days. So we're going to go to buy, call, and our strike date. Now, in order to maximize the efficiency and the returns on this option strategy, it is highly advisable that you choose your strike price below the current share price. And once again, the share price is trading at $95.75. If you were to buy 100 shares of Micron right now, it would cost you 95.75 per share. So to acquire 100 shares, you would need to have 9,000 $575 in your portfolio. However, some of you may not have that in your portfolio. So that is pretty much why this option strategy works perfectly well if you're trading with a small account portfolio as well. So now we're going to go ahead, we're going to choose our strike price. The strike price I'm going to be choosing is going to be the $80 strike price. Now, with the $80 strike price, you have a break even of 101.25. Now, remember the example I just showed you, my break even is at 94. So, because the date got short dated, my break even increased. Now, we also have what's known as a delta. The delta here is 0.78, and we're going to get back to the delta as the video goes along. So our $80 strike price, $101 break even, 78 delta, and we have to pay for this option strategy because it's a buy option strategy. Now we're going to go ahead and click into that in just 1 second. But before that, I want to show you guys why I decided to go with the $80 strike price. It's actually not as random as you think. So let's go ahead and get back into MU. And we're going to go ahead and go into the Robinhood advanced feature right here. Now we're going to go ahead and choose the 1 year chart and see how this goes. So here we are on the 1 year chart. Now, if you were to go ahead and draw a line all the way down here, you're going to see that this stock gives a clear support around the $83 strike price, $83, $84 strike price. Now, the $83 strike price is lower than this blue line right here. And this blue line right here is your 200-day moving average, or it typically shows you the price the stock is trading at for the last 6 months. So the price the stock has been trading at is around $94. So currently, the stock is trading right around the 200-day moving average. Now, I just showed this stock has clear support around the $83, the $84 mark. Now, what that means is that if the share price goes below the $83 mark, it quickly picks back up to that mark. And if the stock rises above, as you can see here several times, it quickly retracts back to that $83, $84 mark. So for that reason, I went ahead and choose the $80 call, which is below the actual support, just to give me some additional leverage. Now, what are we looking for with this option strategy? It's quite simple. By choosing the $80 strike price, all I'm looking for is for the stock to appreciate up to $90, or it's going to make a $10 move. That is pretty much it. So let's go ahead and go back to the actual option right now. Okay, so here we are back on the option right now. And now I'm going to go ahead and explain the break even to you. The break even price only comes in handy whenever the expiration date comes close. Meaning, if the expiration date of September 19 comes around and the share price, this $95 price here, is not at $101, then you surely be losing money. It does not, however, mean you're not going to be gaining on your investment as this share price moves closer. It does not have to hit 101 until expiration date. Anytime before expiration date, once the share price appreciates, your entire option will be up. The significance of this here, I'm going to show you right now. So I just showed you that you're choosing a $80 strike price, and all you need the stock to do is just go up by $10 to benefit you. Now, the $10 is going to go up to is going to be $95 plus 10, which is going to be $105. If the stock goes to $105, then you're going to make $1,000. And this is how the difference between the share price the stock is trading at right now, 95, and the $105 strike price is going to give you $10. It's going to multiply the $10 by 100 shares because each option contract contains 100 shares. And that's going to give you $1,000. And that's going to be your gross return. Now, when the share price appreciates to $105, it could be within 2 weeks. It could be probably within a year. So when you're doing these option strategy, always make sure you choose this strike price here accordingly based on your thesis. Now, every option trader is always right with their strike price or their strategy they're willing to use. The one thing that most option traders get wrong is always gonna be the date. So just always make sure you pay a lot of focus on this date right here. Now, the $1,000 gain you're going to receive is going to be your gross return. Your actual net return is going to be that $1,000 multiplied by your delta. So you're going to multiply your $1,000 by your 78 delta or 78%, and that's going to give you $780. And that is going to be a mere approximation of the amount of gains you're going to receive with this option strategy. Now, let's go ahead and click into it. This option strategy is none other than the long call option strategy. Now, the long call option strategy is an excellent option strategy if you're trading with a small account, and here's why. Remember, I did mention that if you were to buy 100 shares of the stock right now, it would cost you $9,575. If you were to implement the long call option strategy, then you're now able to control that same 100 shares of that stock at a much lesser price. Look at this. It's going to be probably like a one third of the price. Now, because you have control of 100 shares of the stock at a much lesser price, and you have that option in your portfolio, the best thing to do with a long call is to do nothing. And the reason for that is that anyone getting into the long call option strategy is of the mindset that whatever stock they're using this strategy on, that stock is going to appreciate in value over time. So if that is your thesis, then you have to do nothing. Once the share price keeps appreciating, your entire portfolio value is going to keep going up. Now, that is why I have $1,000 in 2 weeks on Micron Technologies simply by using the long call option strategy. Now, while you have a long call option strategy in your portfolio, there are other stuff you could do to make consistent income, but we're not going to focus on that right now. If you guys are interested in learning how to use a long call in order to make consistent income, then just shoot me a little message in the comment section below. Now, if you guys have any questions about the long call or how I make such gains with my portfolio on a consistent basis, then let me know in the comments below. Now, go ahead, like the video, subscribe to the channel, and make sure to hit that notification bell. But most importantly, if there's anyone out there you know struggling with a small account portfolio, please share this video with them. We're trying to help as many as we can get away from that 9 to 5, and the best way to do that is to share the video with them. Also, I do offer one-on-one coaching. If you guys need help with option, then that link is going to be in the description below. Now, until the next video, keep pushing your investments.